Welcome to Accounting with Audra, a YouTube channel focused on helping individuals grow their accounting, tax, financial literacy, and even Excel knowledge. In this video, I'm going to explain how you can calculate your take-home pay in 2022 using up-to-date tax rules as well as if-then statements in Excel. Maybe one of your 2022 goals includes paying off debt, gaining more control of your finances, or saving for something special like a new house, car, or even just a vacation. To do this, one of the first things you need to do is design a budget. All good budgets start with determining your take-home pay, which may not sound difficult. However, the majority of Americans generally misestimate just how much of their salary truly is available to spend. Take Shaq, for example. In an episode on Hot Ones, he discusses how he overspent his first ever signing bonus in just 24 hours, simply because no one explained to him the concept of FICA or other taxes that would be withheld. In this video, I'll provide both a basic understanding of the various taxes owed on salaries and then help you design a simple Excel file using formulas so you can estimate your own after-tax pay. Before jumping into Excel, let's start with the basics of payroll deductions. Several things that you need to know when determining your payroll deductions is first, just some of the types of personal income taxes that need to be considered. Everyone kind of thinks of the basic federal income taxes, that's what you owe the US government. Then, depending on what state you live in, you might have state taxes and even local taxes. And then finally, the third tax is known as FICA. These are your Social Security and Medicare taxes, where federal, state, and local income taxes all depend on just how much money you make and adjust based on the amount of earnings you have. FICA taxes are a flat tax. In other words, everyone owes them, no matter how little or how much you make. In addition to the taxes, you also need to consider that depending on the company you work for, there may be additional payroll deductions that you have elected. And so when you're trying to figure out how much of your paycheck you can bring home and spend on both needs and wants, you have to take into account these other payroll deductions as well. We can't just disregard them. Those are things like health insurance premiums with your employer, if you're making contributions to a retirement plan, whether it's a 401k or maybe a pension you're contributing to, and then finally, flex spending accounts. These are things like health savings accounts and dependent daycare accounts. We'll take those into consideration. So let's go ahead and jump into Excel and talk about how we can set this up to estimate our net take home. And in Excel, of course, I'm going to go ahead and give a title to this. And we're going to start with gross salary. So the gross salary is how much you're making in your paycheck. So in this case, we're going to input a gross salary. Then we're going to take deductions against that salary. So the first deductions that we should consider are things like our health insurance premiums, retirement spending, and our flex spending accounts. And you should be able to look at whatever you elected to know what these amounts are. Everything we're going to do here is on an annual basis. So let's assume that I'm going to make $75,000. So let's assume, for sake of this, so we have some numbers, let's assume that our insurance premiums over the entire year are $2,400. And we're going to contribute to our retirement account. Maybe we're contributing $4,000 over the year. And flex spending, maybe I'm withholding $1,200. So let's now get into the various types of taxes. So if you remember, we talked about there's 3 categories of taxes. We're going to start backwards with the FICA taxes first, because they're the simplest to compute and they are on every dollar of salary that we earn for the most part. And then we'll move into our federal, state, and local taxes. So starting with FICA, the first type of tax is a Social Security tax. Before we get into calculating our Social Security tax, we need to know what the rule is. So Social Security tax in 2022 is 6.2%. It's been 6.2% for quite a while, but it is only a tax on wages up to $147,000. It's going to be the first if-then statement we do. So we need to know our 6.2 and our 147,000. So in your Excel spreadsheet, I am going to put to the right a rate so I can keep track of the rates based on the rules. And then I am going to go ahead and put any rules that I need to know to the side. So our if-then statement is going to say equals if, and then we're going to put a parenthesis. And the whole idea to if then is it says, if this, then do this. If it's not this, then do something else. So in this case, if our gross salary is less than 147,000, then we're going to take the entire gross salary times 6.2%. If it's greater than it, we'll just take 147,000 times 6.2%. So we're going to cap it. Go ahead and put my 147 here. So every year I can come in and change it. And how do I remember what to change? I can go ahead and make it green and make 75,000. If C3 is less than 147,000, so here now we'll link to 147, then I'm going to go ahead and take that number, again C3, times my 6.2, which here I've put in E9. If it's not less than that, then it's more. So I want to cap it. So in that case, then it's the 6.2 times the 147,000. And then I'll close it off with, again, a parentheses, and I've done my first if-then statement. Okay. Our next tax is Medicare. Medicare, the rate is 1.45% on all wages. If you this one, we don't need to do an if-then statement. We're just going to go ahead and put 1.45% all wages. And we will go ahead and take our salary times the rate we put as 1.45. Okay. And then finally, we have a third one called additional Medicare. Now this Medicare is 0.9% on wages in excess of 200,000 if you're an individual. So our additional Medicare, we don't want to leave that out, percent, and it's on all wages in excess 200,000. So here we'll do 200,000. So we could do another if-then statement. Again, it's equal, get some practice with our simple if-thens, and then we're going to group them. We're going to get into more detailed if-then statements. If 75,000 is less than 200,000, then this is 0. If it's not less than, it's greater than. And so then what we want is we want the difference between, so we're going to make a little calc, the difference between our salary minus 200,000. So if our salary is 250, right, we want it to be on that, times 0.9%. And then we have to close the whole thing off. So essentially what I said is if C3 is under 200, it's 0. Otherwise, in other words, if it's greater than 200, then I want to take the amount that's greater than 200, so my salary in excess of 200, times the tax and include that as well. Okay. One other thing I need to do is make these all negative because these are all taxes. So we've gotten through our 3 types of FICA taxes that we need to consider. Next, we're going to get into federal taxation. So this is going to take a little bit more work, and this is where we're going to group some if-then statements, federal taxes. Okay, to do our federal taxes, we're going to have to think about how to calculate this at a very high level. Because remember, we're trying to just figure out what's being withheld on our paycheck, but we also want to make sure that kind of jives with what our ending tax liability is going to be when we file a tax return in the future. The easiest way to do this is to not worry about if you itemize deductions, meaning you have a house and you make charitable contributions, but instead to stick to the standard deduction, because the standard deduction is going to be, and if you are not sure what I'm talking about yet, don't worry, I'm going to get there, is going to be the absolute lowest amount you can take as a deduction on your return. So you're being conservative here. Okay, so determining a federal tax estimate. Determining my federal tax calc, which is going to be the best estimate we can get to start. So we're going to start with our gross income. And this, so you're taxed on your gross income, but in this case, we're just trying to figure out what of our salary is subject to tax. So if you've got a whole bunch of other income, that's not going to be part of this calculation. Again, we're just trying to get an estimate of how much of our take-home pay is going to be available after we pay our taxes. We do get to reduce our taxes by certain payroll deductions. So that's why I said the other reason we wanted to highlight this up above when we were figuring out our take-home pay, because these 3 items, flex, retirement, and health insurance, if you're paying them through an employer plan, they actually reduce the amount of your income subject to federal taxes, not FICA, not Medicare, but federal taxes. So we're going to go ahead and link to those amounts. So equals, I'm going to sum them all up. So I'm going to do equals sum, and you can actually just drag your cursor, or you can type in B6 semicolon B8, whatever you want. And then I'm going to close it off, and that's going to sum those three amounts together. Next, I'm going to do something called my standard deduction. So again, there's a couple ways to file your tax return. Majority of Americans take something that's called a standard deduction. It's the government says to you, you can reduce your income by this number before figuring out how much you owe in taxes. So we got to figure out, okay, so what is that for 2022? These amounts are going to change by inflation on a year-by-year basis. In 2022, the standard deduction for single is $12,950. Married filing jointly is $25,900. And if you're head of household, meaning you're single but you have children, you get a deduction of $19,400. So you may want to pause this video for a minute to go ahead and put the amounts in Excel. I'm going to go ahead and do that as well. And these are just amounts that the government prescribes, and they increase every year, usually by a couple $100 for inflation. So our federal tax estimate, we are going to reduce it by our standard deduction. So then I am going to sum these numbers up. So my amount of salary that's going to be subject to tax, remember this is just your salary, not other income. If you have other income, is $54,450. So that is our estimate of taxable income. Next, we got to figure out what our actual taxes are. Now, the federal tax system is not a flat tax, so it's not as easy like FICA where we can just take 6.2% times our income. It's actually a marginal system, so the more money you make, the higher the taxes you pay, but it's only on that incremental incomes, okay? So down here, we're going to do another grid. If you want to pause the video for a minute, I'm going ahead and I'm putting the amount of taxes for 2022 for single taxpayers based on your adjusted gross income, which is essentially what we just determined. So for example, if you make less than $10,275, you will be subject to a tax rate of 10%. If you make more than that, but under $41,775, you'll be subject to 12, so on and so on. So you guys see how this is an if-then statement. If I make this much, then I'm subject to this much tax. Now, what's going to get more difficult here is we make more than a couple of these brackets. And so we're going to have to group our if-thens to get to the right amount of taxes due. And we're going to do that again in Excel. So let's go ahead and add these numbers to our Excel file. I am going to create federal tax rates. So we're going to start with our rate. We have our min salary and we have our max salary. And then next to that, we're going to figure out our tax amount. And the reason we're putting the min and the max in separate columns is to help make doing our formulas simpler. And this should allow us to update this faster from year to year if we want to come back and reuse this. Okay, so the first tax rate is 10%, and then it's 12%. Our minimum salary for 10% is 0. Our max is 10,275. Now what's nice is the min is always going to be essentially our max from the tier above it. So we can go ahead and make the min equal the prior rate max and copy that down. So then all we have to do is input our maxes and our grid will finish creating itself. So the max for 12% is 41,775. The next bracket is 89,075. If you make over 539,900, that residual money is taxed at 37%. Okay, so next is our tax amount. So this is where we're going to get into nested if-then statements that are going to get more and more complicated as we build our brackets. But this is great because we started with simpler ones up when we did our FICA, and then we're going to build down. So the whole idea here is I have three possibilities. The amount I make of estimated income could either be less than my min, more than my max, or it's an amount that's between my min and max at each tier. So I'm going to create an if-then statement that ensures that I am figuring out the tax at each level, and then I'm going to add them all up using multiple if-then statements. I'm going to start with the simplest part, equals if. If the amount of my estimated taxable income is less, which I know in the first tier, 0, it's not going to be less than 0, but we're just going to build this out one time, and then we're going to be able to copy it down. So that's why I'm doing it this way. So if I make less than the min, then I'm not in this bracket. So my answer is 0. But what about if I'm in the middle or the max? So now I'm going to take and go with, okay, so that's false. So this is where I'm going to couple my if-then statements. I'm going to start another if-then. And I'm going to say, okay, I'm not less than 0. If I'm not less than 0, then I'm either in between my min and max or I'm more than my max. So I have two alternatives. So if I'm false, I'm in those now two alternatives. I'm going to build another if-then statement that says, if I'm one alternative, do this. If I'm the other alternative, then do something else. So let's go to the other extreme. So if now my amount of estimated taxable income is greater than my max, then I know that I'm subject to all the taxes in that tier, right? I have more than this. So I'm going to pay at least 10% on $10,275, and then I'm going to probably pay 12% on the additional income I owe. So if I'm in this situation, then I'm going to go ahead and take the difference between my max and my min, because I'm saying I'm subject to all of it, and I'm going to tax that whole thing by the tax rate. So in this case, that whole thing times my tax rate of 10%. If it's not that though, so I already know if it's not 0, then it's going to be either the greater than or in between. So if it's not greater than, then I must be in the middle. I must be between the two. So in that case then, my false statement I'm going to say is the difference between my estimate of taxable income less my min, so what's left, and I'm going to take that entire amount and I'm going to take it times my 10%. And so by doing that, I will get to a final taxable amount for that level. And then what I need to do is copy this down. Now, things I have to look at is as I copy it down, I definitely want in the next row for it to update to 12%, 10,275, and 4175. But I don't want this reference to my estimate of taxable income to change. So to do that, I need to put dollar signs on my numbers to make that number hard keyed. So B26. So I'm going to come up to my formula and I have two options. One option, the simplest, is you literally put a dollar sign in front of B and 26. So as I copy this down, the B and the 26 don't change. Or if you want, you can use your FN F4, and by doing that, it will hold it to B26. If you're on an Apple, you should be able to do Command F4, and that will also make those static. So now what happens is, watch, we are going to copy down our formula. You can either drag it down or Control C, Control V, and we should get another difference for our next layer, and then we should get to 0 when we get to our fourth layer, which we do, which is good because we're 54,450. So if we've done our formula right, we know that we're going to owe a little bit of tax right here in the third layer. So we can say our total taxes we've computed and then add them all up. Again, using our sum function is 7596. So this is the amount we want to then include all the way up in our federal taxes. So we'll equal negative, and then we're going to link down to all that work we just did. Now, what's something else here, this is all linked. So hopefully you don't need to really update any of this. These will also, your standard deductions should also change year over year. So your greens are your adjustments. Okay, so let's get into state and local taxes. So state taxes. Now, state taxes generally are marginal as well. Some states have flat taxes, 50 states, lots of different rules. If you live in one of the 9 states that have no tax, so Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming, all during the time of this video, lucky you, you have 0 taxes, so you can put a 0 here. If that is not the case, you will need to reference something to figure out what your state taxes are to just get an estimate. So for example, if you're in the state of Pennsylvania, it's about 3%. State of Maryland, again, is like 4.75 to 5.7%, 75%. This one I think you could take a good estimate and most likely just estimate using a flat tax. Let's say I'm going to do 4.75, and then you will, like we've done before, take your tax rate and multiply it by your gross salary. So you have some sort of estimate. You can usually Google and you'll find something pretty quickly, like what's the average tax for my state, and use that as an estimate. And then you have local taxes. Here, if you live in an area where you have a county or local tax, again, you might want to estimate using a flat tax rate. And then if you're a little conservative, that's okay, because by being conservative, if you end up not paying that full amount of taxes, you at least have not overestimated in your budget how much you have available for spending and saving and building out what you have. So again, let's go ahead and make these negatives. Our total deductions, them all up. I like to do them to the side so I can kind of see gross salary minus my total deductions, and my net annual pay is the difference between those two. So my 75 plus my negative 26, or minus my 26. So if I have a salary of 75,000, there's a good chance, depending on your premiums, and it changes for every person and your circumstances, your net annual pay may only be 48,000. So let's say you get paid 20 times per year. So you went per paycheck and you get paid 24 paychecks. Then you can divide this by your 24, and this is your take-home pay, 2010. It's really important, because if you don't do these deductions and you were to just take this 75,000 and you divided 75,000 by 24, you get a very different number. You get these taxes reduce our income by a third. Hopefully this Excel file will now put you in a better position for understanding just how much of your payroll you can put into your budget for both the needs that you have as you make good financial decisions, as well as those wants you have in your life, and you're building your goals to get those things that you are trying to achieve for. If you like this video as well as other videos, please feel free to subscribe to my channel, link below, for additional financial literacy and Excel concepts in the coming year.